Hi everyone, this is Nikki, also known as Business Trader, and you're watching the Awesome10X Global Market Update. Please don't forget to subscribe, like, and share. We do have our Awesome10X to educate you to be globally invested in secular trends. However, today, March 15, 2021, I wanted to share to all of you that I actually nuked all of my portfolio last March 12, 2021. I've been trimming since December, January, February, and you heard me say that pigs will get slaughtered. After the March 12 lower high move of your Nasdaq, going back to about 12.5, 12.6, I figured that even if it rises to about 13,000 Nasdaq tonight or next week, that we would probably have a harder time. So let me discuss a few things in my thesis. Already said last Friday what to do with retarded markets and extensions. You want to be raising as much cash as possible. So I'm not saying that it's going to fall down tonight or tomorrow, but I do believe that alert levels on high cash needs to be done. So let's take a look at a few things about what's happening in the market. Today, I'd be discussing the nuke and NFT frenzy. So perhaps all of you are aware of the NFTs, non-fungible tokens. You've heard about the $70 million Beeple digital art auction with Sotheby's Christie's. And so far, there's a lot of discussion about this JPEG file being $70 million. Reminiscent, of course, reminds people of the Nasdaq 1999 to 2000 bubble. Now, we could be wrong. However, the smart people that I do follow as well thinks that the hype mania will end in a few months. Could end in June, July. We don't want to particularly say, is it April, May, June? So, the party could last. Actually, could last for another 3 months or even 6 months. Because you do have 100 million Americans now with vaccines. You've got reopening themes. You've got the trillions of stimulus bill. However, it could grow bigger before it pops, but this is, in my view, a hype. It may rise after 10 years on applications, just like how the internet matured after about 5 to 10 years, even after the 1999 to 2001 bubble. That's just a few things that I've been trying to digest. Let's take a look at the Nasdaq first. Let's understand this dilemma. So this is your Nasdaq. Assuming that the actual peak is around 13,888. The drop so far has been muted here at about 12,200, and then we rallied back to as high as 13,000 Nasdaq. So I started to unload actually since December, January, February, all throughout this way. And then I finally ended every share last Friday. Although I do have some positions that might be sold tonight because I have a lot of accounts, but my interactive brokers is already done and over. You'll see that my eToro longs are also closed, and I'm more bearish. I'm actually at my most bearish, most maximum pessimistic bearishness ever since the 2020 pandemic. So you would never have seen me bearish here. You've never have seen me bearish there, but only now, frothy valuations, December, January, February, and the last straw, my Jiparagi, would be the March. Discussed about the retarded markets and extensions. I talked about it lengthily in a 1-hour video on why I'm actually starting to be more in a cash mode. Yeah, so let's take a look at your monthly. I want to see the Nasdaq 2001 bubble. So let's try to see what the QQQs. Could argue XLK or just simply the QQQs. So this is your 2001. You could understand that some people still have those heartaches in the internet bubble that eventually crashed. So crashes don't happen all at once, but when they do, it's really tremendous. So we don't need to go as far as the 85% down. Even if we just enter with this crash about 59% or a 48% crash from the peaks, that would already merit a lot of stocks actually falling down. So assuming that we don't really have a prediction as large as that huge momentous bearishness in the 2000 and 2001, 2002 areas, that was a lengthy bear market. Let's try to understand the biggest bears and the biggest bulls. So far, of course, everyone knows that ARC Innovation has basically outperformed every index, whether it's the Nasdaq or the S&P 500. This is the actual performance of the ARC Innovation ETF. Cathie Wood, December 2020, took all the crown from JP Morgan for the largest active ETF, adding $7 billion of inflows. A lot of fixed income products actually only held this title for just 3 months. So equities inflow in Cathie Wood's ARC Innovation Fund was very strong. In that light, also, we've got Michael Burry sharing The Dying of Money, Lessons of the Great German and American Inflations. There is very clear evidence, in my view, that there are uninterrupted trends. I still believe that solar is the cheapest electricity in the world. And so I'm taking a look at potential resistances to be sold for your ExxonMobil come $70 to $90. So I'm not saying that it's really doomed, but if there's a company that I want to short, it would likely be companies in the energy industries, which until now would rise. Yes, the Flintstones eras would still be rising. But I do think that the world has transitioned to sustainable energy. Wind costs are going down, not yet as fast as solar, which would be why maybe I lost some of my wind longs. I was long on my Vestas, Siemens Gamesa, took a loss on them actually. But made a lot of money on my solar play since June. So I took some profits on my solar as well. Actually, I sold that since January, February. The last souvenir was sold. A lot of big luminaries like Jeremy Gratham talks about how crazy the markets have become. And you couldn't argue with some of their track records. Extreme crash predictions by Michael Burry warning America about hyperinflation. Even ARK Invest acknowledged that the correction was overdue. Even China was saying that trimming debt market makes stock market reforms more urgent. You've got a lot of Chinese warning how equities are at frothy valuations, and yet you still see that in the weekend, everyone is still unfazed by the spike in bond yields. Some of the most read articles are market manipulation chatter rising as digital art scene is exploding, Bitcoin hitting another record, leaving other asset classes trailing. And then a lot of Wall Street bets are turning to crypto miners. We talked about the fact that Hot 8 mining, Bitfarms, all of these crypto miners are still undervalued versus the BTCs. However, with impending, with dancing in the knife's edge, we might be actually seeing volatility growing. And a bear warning is seen with the Nasdaq 100 velocity stalling at the 2000 peaks. So Dubai is, this is what's happening. A crypto whale in Singapore is the buyer of $69 million Beeple. Might mean a lot, but if your wealth more than tenfold in just a year, perhaps this crypto whale actually made 100-fold or even 1,000-fold in his assets. Take note that BTCs did trade at some point in time below $1 before. So let's assume this crypto whale did have $1,000 of cost. His wealth would have been 60x by now at about $60,000. $69 million looks a lot, except that these guys have more than hundreds of billions of dollars for all we know. Now, art market is directly correlated to money supply. Take a look at the 2017 levels and even in 2008, 2009 levels. When your asset price, when you've got a lot of Fed printing money and a lot of easy liquidity, there are really that tendency for growth rates in art markets. Take note that in 2010, 2011, the turnovers actually went in the asset art prices. So 2008 was one of the largest crises, right? and there was no art market in 2008. However, the years after that, 2009, 10, 11, 12, actually got a boom on your art market. And that's what you're seeing, that 1 year after the crash of 2020, you've got 2021 roaring like the 1920s. That's what everyone calls it. But the problem with roaring 1920s is that we got a roaring Great Depression 1929. So there are questions. People are asking me, Nikki, how many are participating in buying those NFTs? Do you think that ordinary people like us buy it? Of course not. We don't buy them, but just like conventional arts, jewelry, even an Hermes or a Picasso painting, rich people can always buy excessive amounts in these, but they're not the market. And if that crash, it's not going to prepare the markets to crash as well. It could just be a simple status symbol. Indeed, NFTs could just be a simple status symbol, like somebody paying $1 million for a painting or $100 million for a Monet and so forth. But in my view, it is a sign of a bubble. You've got indications where paintings had a bubble in the past, the market still collapsed. Christie's auction is just a sign that the classic super rich people would, of course, be super rich right now. Inequality is so rife in the markets right now. And telling me today that the market is fine just because Bitcoin, Ethereum, GameStop, NFTs are rising is not a sign of an overall great time to invest in the markets. Housing markets, real estate rising, corporate debts bubbles in the tens of trillions of dollars. I may be a person who loves innovation, but just because I love robotics, AI, indoor farming, so many of these real innovative industries creating jobs and creating true wealth, it doesn't mean I live in a silo where I cannot see that the overall markets are indeed overheated. So, a lot of people, of course, are accusing that Awesome10X likes to think about the stock markets as a marriage. And as a marriage, you have to handle those thick and thins for better or worse. But in my view, right now, I do believe that marriage of stocks is truth. I do like the companies I chose, C Limited, Roku, Spotify, but I had to sell them anyway. I like Angus Pacala, CLA, Ouster, but I need to also understand asset allocation and raise some cash. Now, I like the companies, but I also said I will handle the 20% downside if I see that the upside is 100%. However, if it's just 20% downside for a potential upside of just 20%, let's assume that the market still has upside, it's 20%. If the risk is a 20% downside or a 50% downside, I'd rather be in cash, meaning I'd rather not make money. Please understand that I do not intend, of course, to forsake innovation forever. Think of this really as just giving space to my loves. I have many lovers, and these lovers have to give some space. They're a little bit crazy nowadays. And so my love for innovation and great technologies will never end. But you could see that these are happening as well. Bernie Sanders inviting Jeff Bezos to a hearing on income inequality. So you do see that the rich people seem to be, they don't have a pandemic. Rich people just getting richer. The big tech, however, in my view, might be fined. The Democrats and the Joe Biden presidency might find a way to try to tax the big tech. They might do Congress hearings because they did this in Facebook, Amazon, Google. That would never stop. The rich people paying hundreds of millions of dollars. You've got Top Shot, $338 million of sales for NBA goods and collectibles. The poor cannot even afford for their daily food. And then there's just trillions of stimulus. You are seeing that the trillions of stimulus aren't making the world an equal place. It's just pushing other people into extreme poverty. 39 million Africans are in extreme poverty. Now, we saw how the tulip mania ended. And a quote is, the more prudent began to see that this folly couldn't last forever. Rich people cannot buy flowers to keep them in their gardens. They're selling them again at a cent per cent profit. And it was seen that somebody will fearfully lose in the end. And as this conviction spread, $200 fell below $50 and flatly 75, 80% destroyed. So, you might be sitting at 10x gains today, or even 5x or 3x or 25x or 60x gains. Not saying that a complete crash would happen, but if there's like 90% chance or just 50% chance of it happening, I'd still side with caution. Isaac Newton invested a bit, exited happy. Friends got rich, re-entered, and then he exits broke. So I'll be happy to exit happy, even if I'm gonna miss out getting richer than ever in a potential melt up in the market. So there's a lot of things to discuss, but you could see that not all charts stopped in a single day. Did they all sell down February 15 when the dollars started to spike? Actually, the market stacked sometimes 1 week after, a month after. Churchill, which is Lucid Motors, actually topped around a week after, which is February 22, and then had a dismal drop of about more than 70%. From 64 to 22, it's rallying to 27, but then again, it's still below these $34. I'd assume that any rallies to $30 would be met another selling pressure. So I also gave you guys a trim on everything, and I do think that even the biggest companies like Tencent at 775 right now, gaming is in control in the long term. But you could see that even the best companies are already refusing to go all-time highs. You could see lower highs, 775, 725, 700. Now, it might not crash to $400, but what if it can crash to about 566? Right now, Tencent is trading at about $625. So with a 90% probability of all charts going down, I'd say that the people who refuse to acknowledge that the markets have changed, therefore strategies must change, they will pay for it. They will either fucking lose all their money. They could be a pig getting slaughtered. Now, you might say that I don't want you to be killed. That's why I'm warning you. All of these stock market reforms are more urgent because of looming debt. There's a ballooning debt in Chinese economy. And, you know, there could be a lot of ways to make some money, but I think that the money would be easy money on the downside. So, you know, all of these crypto digital arts are really a sign of the times. NBA Top Shot sales. This one was, I think, $8 million. Now, COVID-19 did boost innovation. There's no question about that. We got more innovative. We got more adaptive to digital acceleration. But there's a lot of people who discuss that BTC is going to be like a doomsday prep perfect portfolio. But also true that it is widely a storage of value so far, right? So Bitcoin, even in 2021, only had $60 million of e-commerce sales. So it's negligible in e-commerce, but it's not used as a transaction mechanism. And you have to understand how the budgets, the velocities right now. This is what Michael Burry is saying. In 1929, in 1919, take note, we even had a huge market roaring 20s in 1920s to 23. The dawn happened 1929, Great Depression. End of World War I caused a jump in German money velocity and inflation. Inflation skyrocketed to 200% in 1919. So most epic extreme analog of surging velocity, inflation following an end of war psychology, pent-up savings, lost confidence in currency and authorities. And inflation is really gonna tempt people to go BTCs. So it can actually inspire a melt up in BTCs. I'm not saying that BTC is gonna go $100,000, but a melt up of inflation is a scary thing. So the actual words from Cassandra Michael Burry. Cassandra is actually a prophet in Greek mythology, which nobody believed, but actually shared the truth. The government is inviting inflation with all of their monetary tinged policies, brisk debt GDP, M2 increasing while retail sales PMI stage V recovery. Trillions more of stimulus and reopening to boost the demand as employee and supply chain costs are gonna skyrocket. That was February 20, 2021. The life of the inflation, its ripening stage, was a paradox, had its own unmistakable characteristics. One was the great wealth, at least of those favoring the boom. And many great fortunes sprang up overnight. The cities had an aimless and wanton youth. Prices in Germany were steady, business and stock markets were booming, exchange rates of the mark against the dollar and other currencies actually even rose for a time, and the mark was momentarily the strongest currency in the world on inflation's eve. Side by side with the wealth were pockets of poverty. Greater numbers of people remained on the outside of easy money. Take a look at the inequality today. So lots of things being discussed in our inner circle. Highly indebted companies, zombie companies are running amok. I am careful about value traps. Even Kathy Wood said that there's a lot of Kathy Wood said there's a lot of value traps. Take a look around. Nobody's shopping. Well, she didn't say this, but I inferred that nobody's shopping in H&M. Nobody's shopping massively in Nordstrom's or Macy's. Be careful out there for the brick and mortar retailers. We've got a lot of people that might lose their jobs with these highly indebted zombie companies. There's a lot of reasons to be cautious. I could go on with charts. I could go with a lot of lower highs, but I think that what you get my point. Be more cautious than ever. So let's take a look at the comments. Hi, Nikki. What do you think ZOM could go this end of March? Zomedica is, of course, a highly risky asset. Zomedica is, of course, a genetic breakthrough. But take note what has happened in this name. Let's go to today's levels of 2021. Let's reset this to the day order. Let me reset the charts here. Zomedica, Z-O-M. Zomedica is genetic breakthroughs, right? So it's very strong. But my question is 230 gonna rise to 290? Sure, that's about 30% upside or 20% further upside. But if you're wrong, it might actually fall down back to about $1.40, reminiscent to what happened just a week ago. So from 290 falling to 140 is a 50% ominous sign that 20% upside is also consequently 50% downside. So I'd like to take profits no matter how early this may be. Can go to $3, but I'd say I'd like to take profits. Pot. What do you think about pot? Is that the question? Cannabis, in my view, has peaked. So a lot of pot stocks have peaked lower highs. Is it safe to park my cash in the money market? What's good with money is that zero is zero. Cash will not earn anything right now, but if you are preparing for a depression or if you're preparing for a doomsday prep, I think that the doomsday preppers are actually highly involved in going long BTCs. So I'm not sure, really. Am I already, I don't know. But I just think, guys, that after hitting triple digits, some of you are earning 10x already. If you have a lot of gains, I don't think it's wrong to just profit take. Now, if you don't have gains, I have a warning. You might actually lose more. So just be careful. What do you think about predictive oncology AI as a long-term investment? Look, you know what? Innovation is great. I love it. POAI is a great company. Nonetheless, I sold either way. I sold at about 1.7 last week. So that's 167 right now. I am getting a bit of I'm telling you the truth. I'm taking a risk. Selling early right now might mean I'm selling 50% higher upside or maybe 20% higher upside. I'm trying to, so the risk is a potential melt up. So going into cash doesn't make me make money, but all I'm doing is preserving the profits that I've done for the last few years. So I think that everyone who invested in 2020, 2019 made a lot of money. So you might need to be comforted with some cash first. Long term, anything can, everything, like all of these genetic breakthroughs will go up. But short term, very scary now. Is Plymouth Rock and blockchain like Humble Pay still a good buy? I went 100% cash. I nuked it all. I sold my Plymouth Rock when it rallied to about $1.20. My cost was about 40, 50, 60, 70 cents. My humble pay, I had to sell at a loss. Initially, I made some money. I sold before the 4.50 and $6. Last week, last Friday, I sold at about 2.95. I got in at about 3.30 again. I sold it already at a loss. I think that I could be wrong for taking so much profits on the side, so much cash on the side. That's why I'm admitting that I could be wrong. But I don't think that it's right to be aggressive in the market, and I'd rather just leave all of my profits or potential profits in the making. I'm willing to actually let go. So I took a lot of out. I exited a lot. Hope that helps. Well, I discussed already why the markets are frothy and retarded. You can look back again on my Friday class, talked about it, the retarded markets. What do you do in an extended market? Sometimes it might not really crash. It might just correct. So I gave a lot of scenarios for your Nasdaq. But I think all that I see as corrections could be mild or it could be deep. So if it's deeper, here at about 11,400 before we go all-time highs yet again, I'd rather be cautious rather than simply ignore the warnings. Because, yeah, so I am more of a sell here first and then ask questions later. Now, the people are saying that BTCs are Armageddon trade, and so every bear out there believes that this is going to go higher. It could go higher, indeed, can go 90,000 or 100,000. But I think that if you didn't buy early here, you're not supposed to buy either at 58,000. Like at 58,000, it could go any way up or any way down. So if you truly believe in BTC being your ultimate savior in a hyperinflationary world, and I do believe that narrative. You could see that nobody's selling their BTCs for e-commerce. They're holding it as if it's like a Rembrandt painting. So that means that most people would just buy BTCs if it fell to 50,000 or 42,000. These uptrends would probably just be one of the few last bastions or last asset class, just like how it was sold to the market, right? BTC was sold to the masses as a way to evade the dollar debasement or the hyperinflation. Now, if you actually listen to a lot of Michael Burry quotes, he did say that he isn't long BTC, but he's not short either. So I think it's just cautious. So in fact, the ultimate bears are actually the BTC holders. I'd say that the ultimate doomsday preppers are actually the ones who can only believe in one true God. And if their one true God is BTC, then so be it. So it seems like the market right now is so haywire that it's like you have a girlfriend or a boyfriend and then you just don't understand them. It's just too complicated. Take a break, give her some space. Perhaps the markets just need a breather. It could just be a psychotic girlfriend out there. Could be just a complicated boyfriend right now. So just take it easy. Jesse Livermore said there's a time to go long, there's a time to go short, and then there's just a time to go fishing. And Awesome10X just wants to go fishing. Fishing means just taking a break, just watching the markets. It's easier to watch the markets without any worries when you're just solely in sideline. You're just in cash. So about stocks that are breaking out, sometimes I prefer to just sit it out. So I might actually not make money in the next 3 months because I'm sitting out. We'll see. I prefer to buy a crash if I can get a Tesla lower, if I could get a BTC lower. So I think that the secular trends are intact, guys. But like I'd like to buy some solar companies lower price. But I just want to be more cautious rather than be bull all the time. So I took some profits. End of the day, I will never forget how much money I've made with Copen and Vuzi, all of these wearables. So of course, I'll buy them on any large drops if that ever happens. So with drones, I would buy them. In fact, with blockchain, I'd buy them. I'd buy Humble Pay if I see it going consolidate. I'm not a good breakout trader. So actually breakouts right now, I'm willing to sell. An example of a breakout would be, well, H&M was a breakout, right? You've got continuous movements on these reopening themes. Your Funkos continue to go higher in continuation, right? This is a huge breakout for H&M here at 210. Can go rally to 230 or even 250. You've got a lot of Flintstones era companies actually breaking out. Flintstones, in my view, are your traditional companies. So you've got all-time highs on your financials, energy names, industrials. So I'm a believer of a John Deere, for instance, and Raven Robotics. But and this is very strong. If you'll notice, this can even go all-time highs tonight. But I guess I'm just really cautious, and so I took profits. Got in here, entered, and exited. I like my babies. I like my girlfriends and boyfriends. So you won't expect me to be in cash for a very long time. But give me a break. Like I need a Kit Kat break now. I need to see the markets on a better footing before I re-engage. Markets look to be frothy in my view. Thank you. Bye-bye.